Am I really going to do my Kraken crypto taxes by hand this year? If you're using Kraken, you already know the tax burden falls squarely on you. They track the raw transaction data, but they don't calculate your gains, losses, or income across all your other exchanges and wallets. As someone who has been through this, I can tell you there are 3 critical steps to making your Kraken tax reporting manageable and compliant: identifying all taxable events, getting your data, and automating the calculations. 1. Identify your taxable events. The first key is knowing exactly what you owe tax on. Kraken transactions fall into 2 main categories. Capital gains/losses. This is the most common and applies to selling crypto for fiat, trading one crypto for another, e.g., BTC for ETH, or spending crypto on goods or services. Every trade is a disposal. Your gain or loss is the difference between your proceeds and your cost basis, what you originally paid for that specific crypto, including any purchase fees. Tip: trading fees on Kraken can generally be deducted, which lowers your total capital gain or increases your capital loss. Make sure this is factored in. Ordinary income. This is taxed like regular pay. On Kraken, this primarily includes staking rewards and any airdrops or referral bonuses you receive. You must record the fair market value of the crypto in your local fiat currency on the day you receive it. 2. Get your transaction data. Manually tracking all this is a nightmare. The best practice is to leverage Kraken's data export features and, if possible, API. Download the ledger's CSV, go to your Kraken account's history or documents section and export the ledger's CSV file. This is the most comprehensive file, containing all your trades, deposits, withdrawals, and staking rewards. Set the date range to cover your entire trading history, not just the last tax year, to ensure an accurate cost basis calculation. Use a read-only API key. If you're using tax software, which I strongly recommend, set up a read-only API key in your Kraken settings. This allows the software to securely and automatically pull in your transactions. Crucially, do not enable any withdrawal or trading permissions, only query or read permissions. This is the safest, most efficient method. 3. Use crypto tax software. This is the single best tip I can give you. Unless you've only made a handful of trades, trying to calculate the cost basis for hundreds of transactions, especially with complex methods like FIFO, first in, first out, or HIFO, highest in, first out, is nearly impossible to do accurately without specialized software. The problem: Kraken's reports only show what happened on their platform. They don't know the cost basis of the crypto you sent to Kraken from another wallet or exchange. The solution: crypto tax software like Coinly, CoinTracker, or CoinLedger takes your Kraken data, imports your transactions from all other exchanges and wallets, and automatically applies your country's approved cost basis method. It consolidates everything into a single, compliant report, ready to be filed with your tax authority, like a Form 8949 and Schedule D for U.S. filers. It will save you countless hours and ensure you don't overpay or underpay your taxes. My personal routine is simple: export the Kraken ledgers, upload it to my preferred tax software along with data from my other platforms, review the categorized transactions, and download the finished tax forms. It takes minutes, not weeks. With that said, thanks for watching, and until next time.